The miracle, they called it. A nation rising from the ashes of war to become a tech titan and global economic powerhouse. That was Japan's story. But fast forward to today and the miracle has all but faded. Now Japan faces a new threat, a silent crisis with global implications. A complex story, decades in the making, is unfolding before our eyes, with the potential to bring down not only Japan, but also the global financial and security order. Forget aging populations, this crisis goes deeper, much deeper. Welcome to Living History. Imagine 1945. Japan lay in ruins, its GDP a mere $30 billion, but within a decade it soared to $300 billion, marking the start of the miracle. Fueled by strategic investments in steel and shipbuilding, Japan's exports dominated global markets. Remember those ubiquitous Toyota Corollas? Yep, by the 1970s, Japan was a manufacturing powerhouse, its success deeply entwined with global economies. So, when the bubble burst in the 90s, the tremors were felt far and wide. You see, the lost decade that followed wasn't just a domestic slump. It triggered a domino effect. Deflationary pressures in Japan led to reduced demand for imports, impacting economies reliant on exports, particularly in Asia and, of course, the US. Stock markets across the globe took a dive and investor confidence wavered. Think of it as a crucial cog suddenly seizing up in the well-oiled machine of global trade. While the world didn't plunge into an immediate recession, the aftershocks of Japan's economic earthquake were undeniable and felt for years to come, serving as a stark reminder of the interconnectedness of global financial systems. Just consider this: the lost decade saw consumer prices fall by up to 6% between 1990 and 1995. If this were to happen today, it would trigger a global economic crisis. And with Japan recently falling into recession, again I might add, the risks of another lost decade, this time fueled by inflation, loom large. Especially in light of the Ukraine conflict and supply chain distributions, which have further pushed inflation to a 40-year high, squeezing budgets and testing Japan's unconventional policies. And this is a serious problem for the US, and the world for that matter, because as we all know, if the US economy sneezes, the whole world ends up with a cold. Though in this case the US would get bronchitis, so go figure where that leaves the rest of us. As America's fourth largest trading partner, it is not difficult to imagine the domino effect cascading across sectors like car manufacturing, technology, and agriculture. American car factories, currently importing $51.6 billion of parts, would face crippling shortages, impacting production and jeopardizing the 800,000-plus jobs supported by the auto industry. The tech sector, heavily dependent on Japan's $70.3 billion exports of electronics and machinery, would face component scarcity, driving up prices and hindering innovation. What's more, agriculture, with $14.6 billion in exports to Japan, would see reduced demand, squeezing farmers' already strained margins. And if you are thinking impossible, just consider this. The COVID-19 pandemic offered a sobering glimpse of these risks, disrupting Japanese production and causing chip shortages that crippled global car manufacturing, including in the US. The problems would, however, not end there. As the world's fourth largest economy according to the World Bank, a recent slide from third place, I might add, which in itself is a worrying development, a Japanese economic collapse wouldn't just be a Tokyo problem. American investors, holding over $1.2 trillion in Japanese assets, would face significant losses, impacting individual retirement accounts, mutual funds, and pension plans. Remember the 2008 crisis fueled by the US housing bubble? Its global reach led to a 2.5% contraction in US GDP. A Japanese implosion, with its deep roots in the global economy, could trigger an even harsher economic slowdown. However, beyond economics, the dominoes fall even further. A weakened Japan would create a regional power vacuum, potentially or more likely probably emboldening China's assertiveness. It is no secret that Japan has been a long-standing US ally in the Pacific, keeping China in check. However, a weaker Japan would be seen as less capable of deterring Chinese aggression, increasing the risk of conflict in the region. Think not only Taiwan, but also further Chinese expansion in the South China Sea, flaring up regional maritime conflicts such as those with the Philippines, Indonesia, and Vietnam. That's not all, though. With Japan playing a smaller role, the US would need to shoulder more responsibility for regional security, increasing military and financial strain. Think of stretched resources, impacting other global commitments, and the disruption of established power dynamics, making the outcome of any US-China standoff harder to predict. But remember, Japan has faced adversity before, and I am not talking about the war. Imagine another era in Japan, back in the 1930s. During the Showa Depression, prices fell sharply, but unlike during the lost decade, the consequences were far more dramatic. Businesses shut down, unemployment skyrocketed, and social unrest simmered. This period became a stark reminder of the dangers of unchecked deflation and unhinged economic management. Now fast forward to today's new normal, inflation. The Ukraine conflict and global disruptions have hit the gas pedal on rising prices, testing the Bank of Japan's unconventional policies like negative interest rates. Remember those days of affordable electronics and budget travel? They seem to be fading fast. But this shift isn't all bad news, some would argue. Just as Japan emerged from the lost decade and the ashes of war before that, there's reason for optimism. Remember the post-war miracle fueled by innovation and adaptability? Today, Japan is once again embracing these qualities. They're investing in cutting-edge technologies like robotics and AI, aiming to be at the forefront of the next industrial revolution. However, navigating this new normal of inflation demands a delicate balancing act. Japan needs to learn from the lessons of both deflation and inflation, avoiding past pitfalls and overheating the economy. A game, I might add. You might also think that Japan's past resilience and current efforts offer hope for a new chapter in its economic story, but do they really? Well, not quite. Although Japan, true to its resilient spirit, bounced back from the pandemic with a GDP rebound of 2.5% in 2021, the challenges it faces today are different. The world has spun on its axis since the 1970s and 80s. Back then, exports were the engine of Japan's miracle, accounting for over 18% of GDP. But China's rise as a manufacturing powerhouse has challenged Japan's dominance. While the country's exports remain strong, the share of global trade has shrunk to only 5%, and relying solely on exports is risky. Remember the cautionary tale of industries over-reliant on specific markets. Diversification is key, as is a domestic market. Here, though, Japan is facing what is probably its biggest crisis, one born not of external forces, but of its own demographic time bomb. Not only does the country have the oldest population globally, with a life expectancy of 84.6 years, nearly 30% of the population are over 65, and only 11% are under 15. This is cataclysmic. A shrinking workforce and an aging population present an unprecedented challenge. It's like trying to swim the Pacific with lead weights strapped to your ankles. But wait, there's a twist. This demographic shift also presents an opportunity. With fewer workers, automation and innovation become not just options, but necessities. Japan is uniquely positioned to lead in robotics and AI, technologies that can address its labor shortage and propel it into the future. Think of it as a chance to rewrite the ending, a chance to not just survive, but to thrive in this new economic landscape. If only. You see, there is another problem: the Japanese yen. Its dance isn't just a recent tightrope act. It's a historical tightrope walk on a plank stretching back decades. Remember the Roaring Miracle era, a deliberately weaker yen fueled export dominance, turning Japan into a manufacturing powerhouse. Think of those Toyotas flooding global markets and affordable electronics on every shelf. But this strategy wasn't without risk. The Plaza Accord in the 80s forced an appreciation of the yen, leading to the bubble economy and its painful burst. Since then, the yen has fluctuated like a pendulum, impacting businesses and citizens alike. Today, with rising global inflation, the Bank of Japan's decision to maintain loose monetary policy keeps the yen weak, aiding exports but raising import costs. It's a familiar balancing act, echoing past successes and anxieties. And while this policy might stimulate short-term growth, we must ask ourselves, will it be sustainable, or will it trigger another asset bubble that will crash the economy? What do you think? To learn more about the challenges facing Germany, check out our next video, linked here.